titled this Wartime Capital Markets, but Matt, I know you're going to explain this a bit, but I'll just kind of walk through some of the headlines here. Number one, Meta and AMD agreeing to an AI chip deal. Meta will own as much as 10% of AMD's stock, right? So that's critical. We highlighted that. And then secondarily here, another one, AMD and Nutanix announced a strategic partnership. Again, it's an equity deal as part of this. I don't think I have the exact percentage there, but it's an equity deal. So Matt, you explained this to me a little bit earlier, but help us understand, what exactly, why is the equity deal piece of this so important in your mind?
Yep. So this is a just the latest iteration of a story or of a narrative we've seen developing and taking place since I can't remember the first one we saw of these, but basically like cross-company holdings of equity ownership, really starting in the AI industry, right? Company NVIDIA owns this piece of
Yeah,
OpenAI, or Oracle, agrees to buy equity of AMD for chips, et cetera. Tons of these. We need to have a catalog, Cameron. Like we'll just
we could
create a
probably put that together.
put that
Yep.
on the to-do list. Yeah. Um, what's going on here? Oh, and then as well, the other kind of flavor of that is federal government, U.S. federal government equity investment in key companies or key needs that the nation state requires to basically conduct and operate its business through this new era that we talked about for an hour. Like, what are the critical resources um, to make this shift from A to B, from the old world to the new? Well, it's things like, hey, we're going to take some equity in MP materials so we can, get this rare earth metal to inventory and stockpile for critical supplies. It's going to be an equity investment in Intel as the U.S. flagship producer of semiconductors. It will be an investment in Trilogy Metals for gold, silver, et cetera, precious metals, or silver being an industrial metal as well. There's probably been a couple of other ones of those, but this week we saw that same highlight. The Meta AMD story would be the one that captured the most attention. What's going on here? All right, so this one clicked with me. There's a framework from basically the pre-World War II Axis powers. So starting with German economists who flipped the script on kind of the Keynesian mindset that we grew up with, or like Western capital markets, or what we think of as the Western capital markets paradigm, like shareholder friendly uh, capital markets, right? Managers are beholden to shareholders. Um, they manage the company towards a total return or profit objective on behalf of the shareholders. Shareholders demand um, optimal returns, whether that means a total return concept in terms of price appreciation plus cash flows or dividends. Whatever combination, we want the wealth creation to be as maximized, highest as possible, right? On the other end of that would be think about capital markets that place shareholders instead of ranking at the top of the fold in terms of all the member constituents. And who do you have on the pile, right? You have shareholders, managers, employees, you could say the government, and then society at large. Think about the Western capital markets paradigm of as we've been, taught it in our lifetimes, right? It's shareholders come first, manage the company for the shareholder, et cetera. And then secondary considerations, short descending. I would say the employee and the public came in like dead last, in my opinion. Like no one cared about, or you weren't supposed to manage the company for the union, or,
Right.
to make sure your society uh, didn't have an opium war conducted against it. Say like you don't have, um, a homelessness problem. You don't have affordability problems. You don't have people suffering from, say, an opioid epidemic, fentanyl, et cetera. We are living, in my opinion, in a swing away from that paradigm where you treat the shareholder first. Now the shareholder is slowly being deranked. They're going to eventually find themselves on this big swing of the pendulum. At some point, a country like the US is shifting towards, a place where, potentially that shareholder could be an afterthought. And what you eventually are doing is you think about the shareholder class of society, right? They don't have to hold a job. They don't derive their livelihood off of income or labor, right? They derive their finances for their lifestyle, their assets out of capital returns on their financial and real assets, right? That shareholder class, you see this in societies. Eventually, if you keep running the paradigm where you do this shareholder centric approach, that that system will naturally lead to wealth inequalities in society, like for good or bad, right? Everything is in like we just call it like everything in moderation, right? To some degree. But when things become, totally imbalanced or unequal, like history shows, um, different classes of society will have problems, or there will be conflict amongst these different groups of society if things get too unequal, right? Um, so when a country finds itself entering an era of conflict, right? There's examples where the shift takes place, where they shift away from that shareholder centric capitalism towards something that looks like state corporate capitalism. It's still technically capitalism and it's not free markets anymore, but it's also not communism itself in the Marxist extent where the state owns the means of production. It's something in the middle, right? And this is a deep, complicated topic. We'll talk about it more on future episodes because we've gone way too long today. But basically, what's happening here with these cross listing shareholder deals, in my opinion, you've got this AI industry, which is supposed to represent the growth engine for the U.S. economy for the, let's say, decades ahead, forward looking. How do we grow out of the problems of this era? You have to have an industry that's going to that's going to drive that growth. AI is the horse we're betting on here. It's like we're fully pot committed at this point. Like this is the road we're going down. We'll see if it works. We'll find that out later.
Right. And so how does the government
Uh,
like actually induce this, right? It's not like the
okay.
US is just sitting there telling AMD you need to go join forces with Nutanix, make an equity deal, right?
Yep. They're not necessarily instructing. Like this isn't state directed. There is not a bureaucrat telling Meta what to go do, in my opinion. What you're seeing here slowly unfold, this will compound upon itself after years of this. But instead of companies being reliant on private capital to finance themselves, to capitalize themselves, and then go chase growth, what you're seeing here develop in these stories where you say, hey, uh, Meta is going to take a piece of AMD, 10%. In exchange for that, they're going to buy um, I don't know how many $100 billion
Yeah.
worth of goods, AI economy stuff, infrastructure as the other half of that deal. This cross listing on the cap tables for your private sector companies is slowly over time diluting out your shareholder class. So that eventually what happens is your large families who really your economy is subservient to. Like that's who the system works for, right? Those stakeholders are being gradually pushed down as the cap table kind of share count, the voting shares, who management has to rely upon on, let's say, a proxy vote contest, et cetera. The private capitalists, your ultra wealthy households, they become um, deranked or just pushed aside. And then your corporate class, your managerial class will then rise to the top. Now, in other examples, right, this like Germany between World War I and World War II implemented the system. Italy under Mussolini implemented the system. Japan in its wartime economy implemented this system. What it will eventually lead to, right? Your managerial class, technically they're independently running the company, but they foot to say, a minister or a ministry within the government who ultimately has oversight. How do you control that? Um, well, instead of capital markets or like raising equity from in public capital markets or raising public debt, um, your financing becomes more and more dependent on bank credit, or in our era, it could be private equity and private credit providing that input. And then ultimately, it's your capital financier, your banker or your private credit manager, et cetera, who is ultimately going to green light your company for one project versus the other. And then the financial sector will respond to the directives of the federal government through, let's say, the US Treasury. So that's the system we're gradually working towards. This is like wartime financing. This is how you realign the political economy, uh, or realign your country's domestic, like the real economy, through a political economy transition. So we're seeing the very tip of the spear of that take place with these cross listings. Um, there's examples of where this can work out, where this can't. Examples where it worked out, well, you'd call it the Japanese miracle of the 20th century, right? The wartime economy was just converted over to produce consumer goods, and instead of tanks, munitions, et cetera, you saw
Cars,
Toyotas,
yep.
cars,
Yeah.
consumer goods, et cetera, flooding the world. You also saw ways that this goes very badly for humanity once it becomes clear that the resources are constrained, and there's very hard barriers that the system can't cross. Um, you saw this with Italy, Germany, et cetera, and where this led into atrocity. So this can go very badly. I'm not going to say this is good, this is bad, whatever, but in my opinion, this is actually what's happening. Uh, the United States, the capital markets that you knew, or the shareholder-friendly capital markets, when you think about the peak area of that, um, Gordon Gekko, Wall Street, 1980s. We've kind of been like, if that was the peak and the pendulum is now swinging to the other direction, um, we're midway on that process, I would say. And that's what this AI cross-listing phenomena is representing. So it's a harbinger, in my opinion, for that direction we're taking and that shift that's taking place in capital markets.
Yeah, we're
So
going to touch back on this
not
in the
good.
future.
There's positives, there's negatives. We'll keep touching on this and what it means, but this is a new economic paradigm, in my opinion, for uh, what the United States is building into, that plugs into kind of that big geopolitical and trade transition that we talked about for the first hour.